Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap. We've got a bunch of things to talk about today, as we have had throughout 2025, because every day there's more updates. We've got White House commentary in regards to China, Canada, the EU, and how all that relates to tariffs. So we'll put all those in different buckets in terms of what it means for the different tariff policies that are currently in place and different tariff policies that could be in place. We'll talk about that. Nvidia will be the first story we talk about. Major announcement. Nvidia's down 7% after hours because of something they said, which technically isn't really their fault, but nonetheless, the stock is falling 7%. I have no idea how it's going to open tomorrow, but could be a buy the dip. It could also be the market saying, hey, we really think this is bearish. So we'll talk more about Nvidia. We got updates on gold, Amazon, US consumer sentiment. OpenAI announced kind of something really interesting today. A lot to talk about, a lot to get into. Let's get into it. All right, let's get started with Nvidia, because that's the biggest news of the day. We were on the market close with Jason today, and this news broke in real time, and the updates broke in front of us. We saw the stock breaking in front of us, and it is what it is. Now we have to deal with it. Nvidia has filed a form with the SEC, and they said that the U.S. government has indefinitely banned exports of their H20 chips to China, citing national security concerns over the potential use in advanced supercomputing. The move marks obviously a significant escalation in tech restrictions between both countries, and the biggest headline from this is a number which amounts to 5.5 billion, which is the amount of charge-offs, aka, in my opinion, the way I'm interpreting that as guidance reduction that Nvidia is going to be essentially telling investors that they're going to have to take on their Q1 earnings. So the street, I believe the whisper numbers are about 44 to 45 billion. You can assume that's going to look more like 39 to 40 billion now with this $5.5 billion charge off. What are the implications of this? Well, number one, it's a tough blow for Nvidia investors. And the reason it's a tough blow is because Trump today tweeted about Nvidia. Yesterday, the big update with Nvidia was that they are aiming to invest about $500 billion in the United States over the next 4 years, manufacturing, hundreds of thousands of jobs, etc. Jensen just had dinner with Trump the other day. So it seems like the relationship was good. The relationship was getting better. Semiconductors already have been excluded from a lot of the reciprocal tariff policies that have been put in place on April 2nd. And then Trump this morning tweeted that, hey, he loves Nvidia. And he specifically said the expedited controls that Nvidia needs will happen soon, because obviously he's happy that they're investing in the United States. And then yesterday at a press conference, he said that Nvidia would not have been doing this without the tariffs, but he's happy that Nvidia is investing in the United States, and that's why he's willing to be more lenient with them. Today, you get this announcement after hours, and it kind of shows that nothing that Nvidia really wanted, which is a very small ask on their part, hey, can we sell these chips to China, is at the moment going to be allowed. So we don't really know if it's a full ban, indefinite ban, if it's a ban forever. Right now, Nvidia is just saying that, hey, for Q1, $5.5 billion, you have to take off the revenue guidance, because it's likely not going to be the case, given the indefinite ban. But what if this happens for Q2, Q3, Q4? What if this happens for the rest of the trajectory of Nvidia being a public company? Now, I don't want to get that extreme with it. I do think this is going to be a news where you buy the dip on it. Like at some level, as long as investors can price it in, we can move on from it. So if this was announced the day of earnings, I think Nvidia would be down like 15%, because it would be super bearish. But Nvidia is telling you about a month before their earnings. They're trying to say, hey, this is the situation. This is what we got going on. And investors can price that in. Now, does that mean Nvidia has to go back to 115, 120 anytime soon? It was trying to make a run at 115 today. Who knows? Right now, this news broke just 2 hours ago. The rest of the world is currently waking up, and over the next 24 hours, the entire world is going to realize that this is a headline piece of news if you are an Nvidia investor, and you're going to have to make the decision of, hey, is it a nothing burger? Is it something that's priced in? Is it something that's not that big of a deal? Or is this a pawn in the chess game that is the American-China trade war? And if it is, well, who knows if China is going to be using this to their advantage, if America is going to want to be hanging this over China in terms of, hey, you guys got to give us some more concessions, or else we're not going to let Nvidia sell you these chips. Now, what's interesting about the H20 chip is that it's not Blackwell, it's not Hopper, it's not Rubin, it's not one of the most exciting new architectures of chips that Nvidia is putting out there. It's a good chip, but it's not like an amazing chip. And it's a chip that helps China with AI and Chinese companies with AI, but it's not giving them the edge over Google, Microsoft, Meta, Amazon that are buying the most advanced chips. So the annoying part about this is that this chip was specifically designed with the intention of being able to sell to adversaries without giving them a competitive advantage, because Nvidia at the end of the day is an American company. They don't want to do that to China, and they know legally that they can't do that, and it's going to be hard to be friendly in the whatever American administration, Republican or Democrat, if they do that. And even this type of a chip that is purposely designed to be worse than the other chips that they have was banned. So it's annoying for Nvidia investors. Stock's down 7%. I do think this gets bought up, but I can't give you a good reason it gets bought up outside of the fact that, hey, it's priced in, it's annoying, it sucks. Market prices in the volatility of it and moves on. The only other reason I can be kind of bullish on this to buy the dip is like, hey, it's a one-time thing. It's not going to last forever. But even if it does last throughout the entire year, and maybe throughout the entire next couple of years of Nvidia being a public company, the market is going to have to figure out how much of the China revenue matters. Now, it's about 15 to 17% of their overall revenues. So if this goes away, market's just going to have to mark down their expectations by about 15%. Maybe Nvidia can make it up in a different area. But as of now, that's the update on Nvidia. Trump tweeted about them today. He was positive. After hours, it seems like the H20 chip is not going to be sold in China. All right, next major update of the day is what Trump said in the White House along with the White House press secretary. So they said a bunch of different things, and all these different things are like pseudo-bearish, pseudo-bullish at the same time. So number one, the White House said they're actively reviewing more than 15 trade deal proposals with expectations that some could be announced in the near future within the next week or two. Bullish, but we already got this headline on Friday. So they're kind of reaffirming this headline that, hey, the United States, that we have 15 trade deals with the United States, but they're not actually saying who the countries are. We know it's probably Japan, Thailand, Vietnam, etc., the UK, but they're not, no one's announced the deal yet, which is obviously something that the market needs to get a little bit more excitement in terms of what's going on with tariffs. Number two, on U.S.-China relations, Press Secretary Caroline Leavitt said, the ball is in China's court, suggesting that the U.S. administration sees no immediate need to re-engage unless China makes the next move. Quite literally saying the ball is in China's court. Well, Trump told her to say that. She said that. So Trump saying, hey, the ball's in their court, which means they are probably not negotiating yet. And then they said this thing that I thought was really interesting. The administration is considering new forms of relief for American farmers as trade tensions continue. What are the implications of this? Well, a couple things. Number one, back in 2018, when Trump got into his first trade war with China, one of the biggest exports that we have to China are soybeans. China's not buying our soybeans anymore because they don't want to pay a massive tariff and they want to continue to retaliate in this trade war. Well, if we don't sell our soybeans and all the other stuff we export to China, which is a major buyer of those agricultural products, farmers lose money. Back in 2018, Trump had to do a bailout of about $28 billion just to appease the farmers from, essentially, the government had to write them a check because China wasn't writing them the check and to keep their businesses afloat. Now it looks like a lot of farmers are calling the representatives and they're saying, hey, this is not good for our business. Can you do something about this? And probably those representatives are putting pressure on Trump to either bail them out again, which seems like inevitable if this continues, or to be able to get a deal with China soon enough. I don't think we're going to get a deal with China anytime soon. Another headline this morning is that China is now restricting the purchases from other Chinese companies along with the Chinese government of Boeing aircrafts. Obviously not good for a company like Boeing. Where's Boeing stock real quick? I didn't look at their stock all day, but Boeing on this headline, it was down about 2.3% of the day. So the fact that this is playing out in the way that it's playing out for American companies that have a lot of demand from China, and China's not backing down in terms of retaliation, obviously that's not a good thing. And so when you've got farmers that might need a bailout, when you've got Trump saying the ball is in their court, aka I'm reading that as we have not even started negotiations. If you're saying the ball is in your court, basically saying, hey, pick up the phone and call because you don't want to call first. And then you're saying that we have these 15 trade deals in place, but we have no idea what the trade deals are, what the concessions are, what the countries are, and when they're going to be announced. It creates a lot more volatility. And based on that volatility, obviously it's been not the best for the markets. The S&P 500 is relatively flat for the day, nothing too crazy. It's down about 1% after hours because of Nvidia. Pretty much everything, AMD, Nvidia, Palantir was even down 2% of the day. Everything's down after hours because of this Nvidia headline. Boeing is even down another 0.72% currently after hours. But what we got from the White House, to me, is we are not working with China yet. We're still waiting for them to pick up the call. And as a result, all of us have to wait until we get this trade deal announced. Next headline is OpenAI. So this was really interesting. OpenAI is reportedly developing a social network similar to X is what sources told The Verge. And one part of the social network that they think is going to be really unique to OpenAI is that it's going to be focused on GPT-powered image generation. Kind of think of it as like Instagram, but AI. You can put in a prompt on your OpenAI social media network and it turns it into an image, and then you can post that image. And then if you have billions of people posting those images, boom, you've got a social network, and potentially posting text as well, just like a platform like X or Threads, etc. Here's my take on this. I think it's genius. I think it makes a lot of sense. OpenAI is lacking something that X has, that Meta has, and that YouTube has, which is data. Google has YouTube, which has the world's data and all, like billions and billions of transcripts every single day. Facebook has Meta and Instagram, right? Or Meta has Facebook and Instagram, which is tons and tons of data. And now they have Threads, which is not monetized yet, but there's a couple 100 million people using it every single month. So there's tons of like information in a textual format that they can feed into their LLMs. And then XAI has X, which recently bought X last week. And X has the cultural zeitgeist of hundreds of millions of tweets. I still call them tweets, even though they're posts, but tweets posted every single day that are from really, really credible sources. So there's a lot of junk posts that are posted on the platform, but there's the Bloomberg, the New York Times, the Wall Street Journals, the Reuters, like I'm saying all these publications, even though they messed up so many headlines in the past. But the point is, like, there's sources that relatively have more trust than just like some random person speaking about it. And so Grok, when you ask, hey, Grok, what did Trump say about China today? It can take the Bloomberg headline about what Trump said, because Bloomberg has the Bloomberg terminal. They source all the news in real time. They post it on X. A lot of other people post what the Bloomberg terminal tells them in their terminal when they're trading, and they post it as content on X. And you've got all these verified comments that now get Grok to give you a better response about what Trump said about China today. If GPT can't give you that information because it doesn't have the real-time data, doesn't have access to X's API, doesn't have access to YouTube, etc., then OpenAI is just going to have to keep paying more and more media companies to be able to license their data, which is not a sustainable business model. At the end of the day, it needs to be aggregated in one space and then interpreted in the models to be able to give real-time data. So I think it's genius for them to do this. Obviously, XAI is now buying X, and so that the synergy there with Grok and Twitter makes a lot of sense to me. However, how successful will it be? How do you get people to actually want to post on a new social media platform? Like, everyone's tried to dethrone X. It's hard. And Threads is only #1 on the App Store because you can go on Instagram and then you can download the platform, or on Facebook. So like, they're going to constantly get downloads because they have billions of people on the other apps, so they can get you to download Threads. But how many people meaningfully engage in Threads? Like, when you're looking for real-time pop culture, sports, music, economics, stock market news, those people go to X versus Threads. And I think, Meta is going to do well with that product, and they're going to keep growing it and monetize it, etc. But in terms of getting a ton of data at once, you need a lot of people to feel incentivized to post on the platform. Now, granted, it looks like OpenAI is nearing 1 billion users. They're growing like crazy. Sam Altman said the growth is something like he's never seen before. So if any company could get tons and tons of people to start using AI-generated images or text to be able to create a social network, I think it would be OpenAI. I mean, like, I think they have the users, the distribution, and the quality of the models to be able to make that happen. My final takeaway from this, even though I don't know if this is going to be successful or not, but I think it's a good idea, is Nvidia. If you have a 1 billion person social media network where the #1 way to post content is through AI generated responses, we're talking about hundreds of billions of queries, all of those using a lot more compute than normal, especially if it's an AI oriented text or image. That screams a lot more GPUs than what OpenAI currently has. So we don't know if this social network is going to become a thing. I think it's a good idea. I don't know if it'll be successful, but if it is successful and there's a lot more queries going into the platform, Nvidia should be the winner. Next up is United Airlines earnings. Now, this one's important because United Airlines is a consumer company. People buy flights, and that's how United Airlines makes their money. They have to travel. Q1 was good. Q1 was actually really good. They beat EPS, they beat revenue, but their guidance is what really is moving the stock, and the stock currently is up about 7% after hours. Currently, right now, now it's up 6%. It was up 7%. Maybe that Nvidia news took it down another 1%. They gave a really interesting form of guidance. So take a look at this. They said, if the economy remains stable, which is defined as no recession, we expect adjusted EPS between $11.50 and $13.50. If we have a recession, we're going to drop that 40% to $7 or $9. So I thought it was really interesting. It's like, this is a company coming out saying, hey, we're not going to get rid of guidance. We're not going to get rid of Q2 guidance. We're going to try to be as transparent and upfront as we can be. All the airlines moved after hours based on what United said as well. And they said, look, it's pretty simple. We get a recession, take down your earnings estimates by 40%. We don't have a recession, we're going to be okay. Which is actually bullish because they're essentially saying, hey, even if we don't have a recession and we have a lot of turbulence, and not just the turbulence in the air, but turbulence also in the economy in the context of tariffs. That was a good one. I just thought of that on the spot. But even if there's turbulence in the broader economy, United still thinks they can pull off 1150 of EPS for the year, barring any major recession. So to me, it's kind of like them saying, yeah, recession, we're screwed. No recession, but still some volatility will be okay. And we think we can at least get 1150 of EPS, which is why the stock is up 6% after hours. So I was happy that they gave this type of earnings. I am curious how other consumer companies, your Nikes, your Starbucks, your Domino's, how all these companies are going to think of giving earnings guidance. Maybe they're going to look at United and be like, hey, this is the playbook. We say recession, no recession. But nonetheless, I thought it was a pretty good earnings by United and hopefully sets up a strong Q1 earnings by all the other consumer companies that are out there. All right, last couple updates of the day. Quick headlines I want to run through. Number one, rare earth minerals. We talked about that yesterday. China is starting to ban them from being exported to the United States. We got a headline after hours. President Trump has launched a Section 232 investigation to determine whether imports of critical minerals like rare earths and uranium pose a national security risk. The Commerce Department has 270 days to complete its review, aka Trump saying, hey, do we even need to import rare earth critical minerals from China? And if we don't, and it's a national security risk, can we find other places to import them from? Now, there's not that many places in the world that have critical rare earth minerals. Ukraine is one of them. That's why we're trying to get a deal done with Ukraine. But nonetheless, Trump is launching another investigation into the context of tariffs on another subset of the economy, which is an important one, rare earth minerals. And that's something that could create more volatility in terms of what we got going on. Also, after hours, Trump did say in a press conference, we may want countries to choose between us or China. That was a verbatim quote, which is interesting because it's a question of, hey, do you choose the U.S. consumer, which has the propensity to spend, by the way, or do you pick China's labor? Both are very important, but the U.S. consumer obviously is very important because if you're baking all this stuff, you need someone to buy all this stuff. Here's a funny fact: the Coachella, which is this big music concert, 60% of the people that went to Coachella, the buy now, pay later stats are showing, 60% of people that financed at least a $2,000 ticket on the low end used buy now, pay later, used Klarna and Affirm to finance their ticket to Coachella, which was hilarious to me because I'm like, Coachella it's one of the most luxury type of events, getaways. Like really rich people tend to go to this stuff, people who have thousands of dollars to spend on like a music event. Apparently more than half of the people that went to this event, they financed it. They did, hey, I'll pay $500 this month, $500 the next month, which is crazy to me because it goes back to the point about the US consumers' propensity to spend is something like we've never seen. And China's labor is very important because that decreases the cost of goods, but you need a consumer who's willing to buy all this useless shit at the end of the day, which I buy a lot of I honestly, I don't buy a lot of useless shit. I can't say that, but I bought useless shit before. I tend to be pretty nimble. I mean, these are my slippers right now. Obviously they're beat up and stuff. I don't know. I don't buy a lot of stuff, but in the United States, we buy a lot of stuff and you need that consumer. So the fact that you have to pick between the U.S. consumer or China labor, it's not an easy choice because people won't buy stuff if the labor costs are so high that they don't get a good price to buy it at, which means you need both, which means we need a deal to get done. Final couple headlines. Gold inflows, very interesting. Record 80 billion so far this year, double the previous full year high set in 2020. People do not want to buy stocks. They do not want to buy crypto. They're buying bonds. Yields are coming down, but we saw last week the yields were going up. They were selling off bonds. Where are they fleeing to? Gold. $80 billion. Just in April 2020, we had 40 billion for the full year. 80 billion just in the first 4 months of the year into gold. It seems like people are thinking gold is the best way for them to hide out in this economy. Finally, Facebook, Meta, antitrust trial. Meta was down about 2% on the day. The trial is now starting. Zuckerberg offered $450 million as a settlement. The FTC wants $30 billion. That they're probably not going to settle. They're probably going to go through with the case unless, Zuckerberg offers like, I don't know, 5-10 billion, whatever he needs to offer, which would be a hit for Meta shareholders. But this is a headwind that I didn't see coming this year. I didn't even know they were going to have this massive trial. The Google headlines on the trial of 2024 have kind of gone away in terms of people caring about it that much. And it's still probably an overhang on the stock and why it's trading at the multiple it's trading at. But Meta is now entering into this antitrust case. And essentially the FTC is saying, hey, we want you to let go of Instagram and WhatsApp and kind of decouple them. My personal opinion on this, I think it's ridiculous. Instagram, WhatsApp, Facebook are products that 4 billion people use every single day. Facebook bought Instagram when they were 1/20th the size of where they are today, and they bought WhatsApp when they were 1/15th of the size that they are today. To say that we have to retroactively go back and stop them from voluntarily buying those companies and those founders of WhatsApp and Instagram voluntarily selling their companies to Facebook is insane to me. And I think the only way you get VCs, venture capitalists, to spend a ton of money in the economy is if they have exit liquidity. Exit liquidity either happens through an IPO or through a bigger company buying the smaller company to give the return to the investors so that they know, hey, I can fund the next kid that has some big dream and they can build the next Facebook, but I need to actually have the capital and the return expectations on that capital to be able to give them the chance to build that company. I think this will get resolved either in a settlement or I think Zucks might win. I also think Trump realizes, hey, we can't break up American companies because that's going to really fracture our pursuit of AI. Meta is one of the only companies actually producing an open source model. Like even OpenAI doesn't have an open source model. So the idea that we would stop Meta from doing this because we're mad that they own Instagram and WhatsApp to me doesn't make a lot of sense. But nonetheless, we're going to see how this all plays out. Right now, FTC trial is a headwind. I am wanting to buy Meta. And if we see below 500, I think I will pull that trigger. If this is an overhang for a long time, maybe we get a lot more below 500. But yeah, I've been meaning to buy Meta for a long time. So if I get a chance, I would take a position in Meta. All right, that's it for me. Thank you everybody for listening and watching. Appreciate everyone tuning into the daily recap episode, I guess, number 2 of this week. Got a lot of love on the first episode of this week on Monday. I love doing the show. I love putting all my thoughts together and actually putting out this content. I hate that I couldn't do it over the past couple of weeks just because schedules got busy, but just kind of got to stay consistent with actually putting out the content. And I like doing this because I write up this recap every day and I post it on X. So happy to do it in video format. All right, cool. That's it for today. I'll see everybody in the market open tomorrow, and we'll get back into this incredible journey of covering the stock market in 2025. Thank you, everybody. See you on the next one.